Elon Musk's bid to fully buy Twitter in a hostile takeover is a top story in the business world today. Solange Moujon here with us for more on what it means for both the world's richest man, but also the platform social media.
Yeah, there's a lot to unpack in this story and many, many unanswered questions still. First, we don't know yet how Twitter will react to Elon Musk's offer to buy the company for $43 billion, which he said is his best and final offer. Now, it comes in at 38% more than Twitter's close April 1st, but the platform's stock has traded above $54.20, that mark before. I'll tell you more about the sort of humorous significance of Musk's price at the end of the bulletin. But for now, we're waiting for the response by Twitter. It may do what's called a poison pill, or create legal roadblocks to keep Musk from buying more stock, in addition to his current 9% as the largest shareholder. And then there's the question of whether Musk has the money, even if he is the richest man in the world. A lot of his Tesla funds are tied up in shares. And on top of that, many of those shares have been borrowed on already. So firms like Morgan Stanley would have to step in and invest heavily. And we do not know yet if they're willing to do that. And finally, if a Musk takeover were to happen, what would this mean for Twitter? As Musk wants 100% free speech and no blocked users like Donald Trump on the site. Now, one expert on debunking conspiracy theories wrote that if there were no restrictions on Twitter, it would become, quote, infested by conspiracies, scams, racism, and hate speech. Now, with concerns being voiced and the funding not in the bag yet, this is not yet a done deal. And that has been reflected in Twitter's share prices. While most markets, including Wall Street, are closed today for Good Friday, Twitter's shares last night were in the red at minus 1.68, which likely means investors are not too impressed by Musk's offer. Now we turn to fertilizer. One of the major reasons food prices and food shortages are popping up around the world is because of fertilizer. Farmers largely rely on chemical fertilizers for good yields in their crops. Before sanctions, Russia was the world's #1 supplier of nitrogen fertilizer and the #2 for phosphorus and potassium ones. With the war in Ukraine, those exports stopped. Now, this combined with the fact that natural gas, which is needed to make the fertilizers, is becoming more expensive, means you have a scenario where prices are skyrocketing, as Leo McGuinn tells us.
Small granules, worth their weight in gold. This fertilizer, called ammonium nitrate, is now worth over €1,000 per tonne. A price that has multiplied fourfold in 1 year. Expensive, yet necessary for this French farmer in order to increase his wheat production. His stocks of fertilizer for the season have nearly been exhausted.
These are the last contributions I will make. This is the last of my stock, to fertilize my soft and hard wheat.
Stocks that will need to be very quickly replenished. But the price of fertilizer is soaring, a consequence of the war in Ukraine, with Russia being the world's #1 exporter of fertilizer. As sanctions continue to mount against Russia, exports have ground to a halt. The price of natural gas, a key ingredient in fertilizer, has also skyrocketed in the last few months.
It's a big worry. Today we don't know if factories are still going to continue to produce fertilizer since we stopped buying. Some farmers say, at this price, they won't fertilize their wheat.
Europe can turn to other countries for their needs, but it won't be without its consequences.
We will effectively replace the Russian embargo with extremely expensive transport costs or gas costs, and therefore the price of fertilizer will stay expensive.
China, another big producer of fertilizer, has shut off its exports since the emergence of coronavirus.
Now to Kenya, where fuel shortages are rocking the country. The government is blaming oil companies for hoarding stockpiles, and it has threatened to reduce quotas if the firms don't sell their full allocations. But cash flow and government subsidy problems have also compounded the crisis. James Mulholland has this story.
Traffic at a standstill in Nairobi. This has been the scene in parts of the Kenyan capital for over a week. As petrol stations ration their dwindling supplies, people have been queuing for hours to get whatever fuel they can.
You don't have to burn 3 hours to get fuel, something which can be gotten in less than a minute. Translate 1 minute to 3 hours. It's the economy that is losing, and it's lots of money.
The shortages began in early April with the government accusing oil companies of hoarding stocks in anticipation of a mid-month price hike. From Friday, fuel prices across the country jumped 9.9 Kenyan shillings, around 8 euro cents per litre.
The country has adequate stocks of petroleum and petroleum products. We have determined that some players have been hoarding this product. This is not an acceptable situation.
The government also says oil marketers are restricting supply to the local market and are instead exporting to neighbouring countries. It threatens to punish offenders by limiting how much fuel they are allowed to import in the next quarter. It's also offered incentives to those who sell above their usual local quota. Oil companies have rejected the accusations of profiteering. They say they're waiting for 4 months' worth of subsidies owed by the state. The government on Wednesday deported the CEO of a French oil subsidiary, Rubis Energy Kenya, over alleged economic sabotage.
And finally, for me, I want to take you back to our top story on Twitter because there may be a hidden meaning in Elon Musk's offer. As the New York Times tells us, Elon Musk seems to have a love for marijuana-referenced share prices. The share price he offered for Twitter was $54.20. Now, in the United States, 420 is code for everything related to pot or marijuana. Now, this could be a coincidence, but Musk has used this reference before. In 2018, he offered $420 per share to take Tesla private, the same year that he went on a famous podcast and got high on air. So he may be saying something there.
We'll
never know.
I would say it's far-fetched, but it's like you said, it's
Elon
not beyond
Musk.
him to have a half-baked idea.
It's not. There we go. It's not.
All right. Thank you very much, Solange. Solange Moujon with a roundup of what's making business headlines. Stay with us live from Paris, continuing after this break.